I've had quite a few come in that have profit of $300,000, paying $100,000 in taxes because they were not taking advantages of the benefits of being an S Corp. And it's silly. The process is very simple. It's literally just a form to send in to the IRS. We give you the directions on exactly how to fill it out, and that's it. After that, we'll move you to payroll and get things rolling for you. There's really nothing different day to day about being an S Corp. You'll continue to keep your business and personal separate and continue to run your business as you normally do. And then you'll definitely see the difference in the tax savings when it comes to tax time.
Hello, and welcome back to Entrepreneur Money Stories. Kelsey, thank you so much for being here.
Thanks for having me back. I'm really excited about this episode. I think it's going to be really informational for a lot of our listeners, and I am just so excited.
Yeah. I think when people hear us say that we're excited for these episodes, they bust up laughing. They're rolling their eyes. They're like, nobody's excited to talk about this. However, we get this question a lot. Like, a lot is an understatement. And we always promised that this podcast would be our way of answering questions that we hear from business owners all the time. So we're here answering your question. This is a question that we get from a lot of our clients, especially for businesses who are in high growth mode. So if you are in high growth mode, you are profitable and you are starting to see that it might be advantageous for you to become an S Corp. We want to talk through all of the advantages, disadvantages, and things to consider as an S Corp. So if this is not something that you're considering today, I want you to flag this episode, save it to your favorites. This is something that you can come back to over time, that as you're thinking about it, that you can come back to this. Also, if you haven't been thinking about becoming an S Corp, maybe you should, because you can give me your opinion on this. But I think we have a lot of older tax accountants who they're not as big of a fan of S Corps. And so they tend to advise small business owners not to become an S Corp. And I think I'm going to call it for what it is. I think it's laziness on their part because it's a more difficult return.
I completely agree. It adds a level of complexity to the tax return. It adds an extra layer for them, an extra return for them to do. And there's additional guidelines to follow, things like that. However, the benefits of being an S Corp are very black and white. It's not a subjective, is S Corp most advantageous for me when I'm talking about my tax dollars? That's completely objective. And we're going to be giving you the criteria of what to look for so that if you feel like your business is ready now, it's time to start exploring that option, or just to be on the lookout for when your business is ready to become an S Corp.
All right. So I always like to step back and define things before we dive in. So for somebody who's listening that has no idea what we're talking about, Kelsey, what's an S Corp?
There's a couple options here. You can be an incorporation and file as an S Corp, or you can be an LLC S Corp. I know some of the times we hear clients say, I'm just an LLC. Well, you can be an LLC S Corp. All it is an election for tax purposes. The S stands for small businesses. I believe you have to be under 500 shareholders, which if that is confusing to you, don't worry about it. You very well may be in that category. But that's all it is. It's a special election for tax purposes. And we'll go into what all of that entails and when it is best for you to be an S Corp. But that's all that it is.
Perfect. Thank you for that simple explanation. So I think first and foremost, for anybody who is listening that's new to this, why would somebody want to be an S Corp? I mean, I see a few very specific things in my opinion. And yes, it's to save on taxes, but it's also that asset protection, the retirement options. It's when you're looking at S Corps, what are your kind of favorite reasons for a client to become an S Corp?
Yeah, it opens a whole new door of options for you as a business owner and for the business itself. So saving on taxes is one of the main reasons why a business would want to file as an S Corp. When your business gets to a certain point, and I'll go ahead and get into that, it definitely becomes most advantageous for you for tax purposes to go ahead and file that S election. A few of the things that we look for is your net income at least $50,000. This is when it starts being more beneficial to go ahead and file as an S Corp.
So I want to pause real quick because that can be confusing. So net income, if you This is not gross. This does not mean the amount of sales that have come into your business. This is net. So we're going to run the profit and loss statement for your prior year or profit and loss year to date. You could do the rolling 12, but we want to have the 12 months. If you are running at a net profit, go all the way to the bottom of the income statement or the profit and loss statement. And you'll want to see about $50,000 or more in that net income. If you do not have your bookkeeping complete, right, or you're not sure, just remember, most important, we have accurate bookkeeping, because if your bookkeeping is not accurate, you could be putting things on the balance sheet that shouldn't be there. You could have things in your revenue that's duplicated. You could have expenses that are duplicated. So you might be profitable if your bookkeeping is not done correctly. So first and foremost, make sure that your bookkeeping is done correctly.
But remember, we said this before, but these are your tax dollars we're talking about here. This is cash out of your pocket. So we really want to make sure that we get this right.
So once we know that the bookkeeping is right, if you're using a bookkeeper, request your profit and loss for the last 12 months and then the previous year so that you can review that information. And if you're not sure, or they're not able to give you that profit and loss, let's reevaluate our money team, because your money team should be able to send you your profit and loss at any time so that you can do this type of analysis. We hear too often that tax accountants who are doing their bookkeeping, or you have Aunt Sally or the neighbor or the bookkeeper down the street doing your bookkeeping, and that they're not able to provide these types of reports. At any time, your bookkeeper you should be able to request the P&L and you should be able to receive it. So small tangent, I'm sorry, but I don't want someone to hear $50,000 without understanding that if your bookkeeping is not done correctly, you can't make this determination.
That's right. And I want to elaborate on that 50,000 even further. So this is the most important piece of data that we're looking for when deciding to become an S Corp. And becoming an S Corp can go against you if the revenue is not there. So this is a very tax heavy election, and the dollars and the profit, all of that really matters. So if you have plans to downsize in the future, your business, maybe scale back, we're not really planning on making as much as we did last year, stop the decision making right there. The business has to make at least $50,000 for this election to work in your favor.
So maybe 2 years of 50,000. I think that's what we saw a lot of over the last few years, is that we had this boom in the economy post-COVID, and we had a lot of people who wanted that S Corp election. And in 2023, we're seeing that stabilize out, and we want to make sure that we have more than 1 year of data to review. Would you agree with that?
Yes. It will just further prove the sustainability of that mark on your business, that it can keep that net income of $50,000. I think in previous years, 1 year was good enough to be like, okay, my business has proven itself. Things are going really well. Things are ramping up. I can go ahead and become an S Corp. However, all of the instability of the economy for one reason or another over the last 4 years or so has shifted to where we need to really, really make sure that the business can sustain that mark. So we've transitioned to 2 years of net income of $50,000.
Have you ever heard yourself saying, I'm not a numbers person? How about, I've never been good with money, so why even bother trying? And this is one of my favorites. My parents, my family, they weren't good with money, and now I don't know how to manage my own money. I want you to imagine what it would feel like to overcome the imposter syndrome and financial insecurities as a female founder. Kickstart Accounting Inc.'s Money Mindset Mastery program offers a transformative 7-step approach to understanding and mastering your money mindset. Learn to heal your relationship with money. Get a grip on the stories you're telling yourself. Find the practical tools to get off the emotional spending roller coaster and gain confidence in spending in your business. You'll benefit from the perfected reflection strategies for personal growth and self-awareness. access to valuable resources and mentorship, and the opportunity to join an influential community. Take control of your finances and life right now. Go to kickstartaccountinginc.com/courses to learn more about the Money Mindset Mastery program. I cannot wait to work with you and help you finally master your money mindset. Before we go down a rabbit hole, because I feel myself asking questions there, I want to pause and just finish talking about the benefits of an S corp before we go any further. So I think number one benefit is going to be saving on taxes. It opens up the door for additional retirement options and 401k. It can provide asset protection. It allows you to be able to consider hiring on a board of directors. It just gives us some additional opportunities. Let's talk about why we wouldn't consider becoming an S corp, or maybe some of the drawbacks of becoming an S corp. And I think it's going to lead us right back down that rabbit hole we were just in.
Yes. So there's a lot more restrictions in how you can spend your money and how the activity that can be in the accounts of an S corp. And if that revenue mark is not there, it really can work against you. So I don't want to get too tax accountancy, but there's something called basis that's really important as an S corp. And having that net income of $50,000 really helps make sure that that basis is moving along in the correct positive direction that we would want it to. And when that doesn't happen, it can really lead to tax liabilities that you are not prepared for, as well as the restrictions of how you can spend the money when it comes to personal expenses. So I know we preach this all the time that you really need to keep your business expenses separate from your personal, but as an S corp, it's more important than ever. If you were to get audited, it would have serious ramifications on the business and on your tax liability. They do not like that. It's restricted as an S corp.
So I think the big thing when we think about becoming an S corp, and I think that this is one of the most confusing things for our clients to kind of wrap their minds around. As an LLC, when you take a draw, when you pay yourself as a business owner, you are going up to what I consider kind of the business ATM, right? You're just literally taking cash out of the business. You are not considered a business expense to your business. So you are not on payroll. You are not on the income statement. You are just taking out cash from your business. It's considered an owner's draw. It's part of equity on the balance sheet. When you become an S corp, you are now on payroll. So with the rest of your employees, you might be your only employee, but you are on payroll. And now your salary as a business owner is on the income statement. You can still take draws, which is one of the benefits. However, we need to make sure that you are paying yourself a salary and you are now a business expense to the business, which I think is a great thing, right? I think that seeing the business owner on the income statement allows us to really evaluate whether or not the business is healthy and sustainable and can continue to be profitable. The business owner has to be paid. And so I love when we can see our clients move their payroll onto the income statement and become an expense to their business. But let's just touch on reasonable compensation and reasonable salary and kind of how that affects this decision and what they need to watch for.
Yes. So the IRS does a terrible job of actually saying what is reasonable compensation. So we just have to go by their very gray guidelines.
I love the IRS. The IRS is great. They make our job so easy.
But based on previous rulings, guidelines, clarifications, things like that, officer salary needs to be comparable to what somebody doing your role would be paid in your area. So one way that you can do this is by going on something like Glassdoor, salary.com, and seeing what is a going rate for someone that does something like you. And I hear you now. You're like, well, I'm a creative and there's really nothing like what I do out there. Or I do a million things. And that is very common. That is just the very first part of the IRS guidelines when computing reasonable salary. If we can't do that or the information's not available, then we go by the information that we can, and it will be compared to the net income of the business. So basically what we don't want is for the IRS to come in and say, I see your business has net income of $200,000 and you've paid yourself $2,000. That is not a reasonable salary. So that's kind of how we compute that.
Yeah. Now, if the Glassdoor option or salary.com, if you're not able to figure that out, talk to your tax accountant. When we work with our clients, we do have a software that we're able to calculate reasonable compensation. So if you are not working with us, talk to your tax accountant about utilizing their tools and resources. They may have the option to be able to run reasonable compensation for you. I think I was doing a continuing education event last year. And I think one of the things that always surprises me is how detailed the IRS will get. And I guess it shouldn't surprise me, right? Like they love the details. they are probably our nerdiest bunch. They definitely blow us out of the water. But, they are going to look at the percentage of time you spent in each role. We make some estimations and how much somebody in that role would be paid. And so they are being very detailed. And so you can be very detailed as well, and that you spend 20% of your time in sales and marketing, you spend 20% of your time as a CEO, and maybe 60% of your time as a practitioner. What is the salary for each of those roles? What is the hourly rate for each of those roles? And then multiply it and back into that and then document it. We have to document it. If you make this number up and then you lose the document, it means nothing, right? We have to have this information documented.
Yes, I was going to say that as well. Make sure you document everything and keep it in a safe place, because if you were to ever need it, you want to make sure you're able to show how you calculated that reasonable salary.
Let's talk about some of the requirements. We talked about reasonable salary, but what are some of the other requirements for somebody who's considering being an S corp?
Yeah. So since as an owner of the business, as an officer, you are required to be on salary. If your business has never had employees before, if you're the first employee to your business, that will require you to begin payroll so that you can have an official officer salary. What that entails is registering the business for state payroll accounts, federal payroll accounts if you don't have any yet. And it can be a little bit of a tedious task. I know we offer this service for our clients, so it can be completely hands-off for you, but registering for those payroll accounts will be necessary. And then you'll need some type of payroll system or payroll provider to calculate and file and pay all of the payroll taxes for you on your business's behalf. I know we use a service called Gusto. So if all of your employees are in the same state, the fee for that is about $40 a month and $6 per employee, just so you kind of know what you're working with.
It's pretty cheap now. Like I think payroll processing used to be a barrier for entry here. Because we had to work with our CPA firm or we had to work with an ADP or Paychex. And Gusto has really, I think, made their mark in the industry for entrepreneurship because that's very affordable. Like if you're considering becoming an S corp, the $45, $50 a month, it's pretty darn affordable.
I know there is no reason you should be manually calculating, manually filling out, and paper mailing forms in for payroll. At $46 a month, it would be silly not to use a payroll provider like that. And then, of course, bookkeeping. And like Danielle mentioned at the beginning of this episode, it has to be accurate. So much is riding on this. I know I touched on that basis word before. This really comes into play here. Making sure your bookkeeping is accurate for your basis is really important. Of course, making financial decisions is important as well. But when we're talking about S Corp specifically, we have to know where everything is going.
Yeah, I think when we think about the cost of becoming an S Corp, the main costs are payroll provider, bookkeeping service, because 99% of business owners are not accounting experts and shouldn't be doing their bookkeeping. They don't have time for it. So we need to make sure that we have a bookkeeping service, and then the tax filing. So because you are now an S corp, there is an additional filing fee. So I think those are the three main costs that I can think of that are going to need to be considered as a business owner. But again, if you're bringing home $50,000 plus in income, those dollars aren't breaking the bank.
That's right. And that's one of the reasons why we do say to be around $50,000. The additional costs of being an S corp are outweighed by the tax savings. And then I touched on this earlier, but separating business from personal is a necessity. It's required as an S Corp. So making sure that you are ready to separate everything from the beginning of the year that you're going to be an S Corp moving forward. If you are one of those that are like, I'm not, it's fine. I will never be able to separate business and personal. I've heard it quite a few times. Then you're not ready.
Yeah. Don't become an S Corp until you are ready. I mean, I was just asked this. I was speaking on another podcast yesterday and they said, well, what happens if you accidentally put something on your personal card? And I say it all the time, like, I recently lost my personal card. I had to put a few things on my business credit. Like, it's not the end of the world, right? Like, we're not saying that you have to be 100% perfect at all times, but you need to 98% of the time make sure that you are having that division. And if you accidentally do it, that you have a bookkeeping team in place that you can say, hey guys, these were personal expenses, and then mark them correctly as a draw.
That's right. I hear this all the time. Am I going to get in trouble for that? And the answer to that is no, absolutely not. We'll just make sure on our end that everything is recorded correctly for you.
Today's show is brought to you by Kickstart Accounting, Inc. Are you ready to take control of your finances and pave the way to sustainable profit? Look no further than Kickstart Accounting, Inc., your trusted bookkeeping service since 2015. They've worked with thousands of other business owners, so they understand your unique needs. What really actually sets them apart, though, is that they're entrepreneurs themselves, dedicated to entrepreneurs like you. Kickstart Accounting Inc.'s strategic framework empowers you every step of the way. They will start with their safe and secure onboarding process, use their magic to set up QuickBooks, and provide you with their easy-to-read financial snapshot. Don't forget, you'll have a dedicated team to ensure that your financials are accurate and on time. Don't let bookkeeping overwhelm you. Trust the Kickstart Accounting Inc. team today. Visit kickstartaccountinginc.com to book your discovery call and get started.
Anything else that you can think of that's important to touch on in terms of the benefits or drawbacks of being an S Corp, or any success stories that we've seen, or horror stories?
Oh, I can go both ways. And sometimes they're the same. Sometimes the horror stories that come in are our biggest success stories when we make them an S Corp. I know I've had quite a few come in that have profit of $300,000, paying $100,000 in taxes because they were not taking advantages of the benefits of being an S Corp. And it's silly. The process is very simple. It's literally just a form to send in to the IRS. We give you the directions on exactly how to fill it out, and that's it. After that, we'll move you to payroll and get things rolling for you. And that's pretty much it. There's really nothing different day to day about being an S Corp. You'll continue to keep your business and personal separate and continue to run your business as you normally do. And then you'll definitely see the difference in the tax savings when it comes to tax time.
I think the big thing that kind of keeps on lingering in the back of my mind is, don't forget that you can ask for help. Like, you are not on your own when you think about having to fill out the paperwork for becoming an S Corp. You are not alone when it comes time to set up for payroll. You're not alone when you decide how much is reasonable compensation and how much to pay yourself. You're not alone when you need to consider, how much do I need to take in draws and how much do I need to be taking in salary? How do I manage the cash around that? How do I save for taxes still? And the big thing is, just don't forget to ask for help. Asking for help is going to allow you to be able to take advantage of these tax savings. Look, I have, I think I've shared this on the podcast several times. I'm pretty conservative, right? Like, I want to follow the rules for paying taxes and the IRS, but let's not be crazy, right? Like, let's save the dollars when we can save them. Let's not overpay just because we don't understand how to do it. So don't let asking for help keep you from getting this tax savings and overpaying at the end of the year.
That's right. It's not as heavy of a lift as it might seem. It's actually a very simple process. And I know for us and our clients, we're always happy to walk you through every single step. We're with you every step of the way. So we're always on the lookout for when clients should become an S Corp, and we'll bring it to your attention when we feel like it's the right time. But we're always here to answer questions.
Yeah. So if you need help with any pieces of this puzzle, so if you are a current client, just reach out to your team. You have your account manager and your bookkeeper. Reach out to your team if this is something that is a good fit for you. If you are not a client and you need help making this decision or in any of those steps that we've laid out, I encourage you to go to kickstartaccountinginc.com. There's a blue button up at the right-hand side. It says book a call. You can book a call. You'll talk to Kelsey, myself, Aubrey. One of us will walk you through that process. And we're here for you. We are here to be your resource. It is our big mission in the world to help entrepreneurs understand their numbers so that you can have healthy, sustainable, profitable businesses. And this is one of those pieces. We need to save on taxes so that you can have a healthy, sustainable business. All right, Kelsey, thank you so much for being here.
Thank you. See everybody next time.